TFNN. Headline News Update. Here's Tom O'Brien.
Hi, everyone. Basil Chapman, sitting in for Tom O'Brien, vacationing Tom O'Brien. This is the Everbank synopsis of the market as it stands right now at 10 a.m. The Dow's down 185. The S&P's down 20. So the Dow's at 17,092. And this is going to be very interesting because that 17,500 level I spoke about yesterday, really important in my work. We nicked it to the downside yesterday, but closed sharply high. It was a 300-point move from the downside to the upside in the Dow yesterday. Huge move in the S&P as well. And the yo-yo continues. It's down 21 at 2,060. The comp index is down 58 at 49.38. The volatility index is up $1.93 at 18.02. Made a big deal about it over the last few weeks and continue, because if it's making higher highs and higher lows, that's buying pressure in my work. That's the way I read it. Let's go on. We've got crude. We've got gold. Gold was down sharply yesterday. Today it's up. It's up 960 at 1162. Silver is up at 15.15. It's up 18 cents. Trying to get into the middle of that candle from yesterday. Very sharp move to the downside. You've got crude oil. Crude oil had a rally attempt yesterday. It's trying again to follow through on that. It's at 52.73, up 40 cents. Now, the dollar is very important because the dollar made a leg E, Chapman wave methodology, a peak E. That means a lower high bar today implies that there's a peak E. The 120-minute chart made a peak D, and now you've got this consolidation pattern. This is the opportunity for gold to have a bounce. I'm calling it a bounce as we stand right now because the way that the dollar broke the trend line resistance yesterday is very impressive. We're going to see what happens over the next 2-3 sessions, because if the dollar gets to 90, the 97s, that says it wants to retest the previous high. So we're looking at this very closely. And the support is at 95.50. The close under 90. Let's call it 95 to be safe. Under 95 says that the dollar has had its run. Gold is going to have a good move to the upside. Let's continue. Bonds. Now, this is fascinating. The bonds right now are down 230 seconds. Had a very strong intraday move right to the 200-period moving average. That dashed trend line that I had drawn in yesterday. And what it said is, this is a resistance level, 154.27. It went to 154. Check it out right now. It went to 154.23. So as it stands right now, we've covered a bunch of the areas, just the EUR USD currency pair, the euro dollar currency pair, trying to form some kind of a base with strong resistance to 1.109, and the support that it has to hold is at 1.09. So let's just run the numbers here to show you exactly what I'd be looking at for intraday work. The volatility index is back in a strong mode. If that volatility index at 1812 closes the session over 19.30, that's going to be very positive for the VIX index, which means it's very negative for the stock market, because it means there is intense buying pressure of the VIX that relates to selling pressure of the stock market. So as I'm looking at it right now, I'll give you this. Remember yesterday I said if the volatility index starts to go under 17, especially that 16.80 level, be careful. There could be a strong move to the upside. And I'm not sure if I had mentioned it, but I had what I call Chapman wave trend gauge reading. Had that again yesterday. I think we've used that up. This is a very sensitive market, a very volatile market. And I'll be following it up in the next hour or two when I do Tom's show and my show. So this is the 10 a.m. update. It's brought to you every day by Everbank. For more information on the products that Everbank offers, go to the front page of TFN. You can visit everbank.com/TFNN. That's another way to do it. So this is going to be an important session because the Fed also has something to say at 2 o'clock. But as it stands right now, it's a very weak market. China's declining, and the FXI is down very sharply. As we're looking at, right at the 200-period moving average, at the 200-period moving average of the weekly chart. Thanks.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.